You guys, I can't be the only one that's stressed out today. I cannot be. Literally the past 3 days have been hectic in the stock market. Literally the S&P 500 is down about 5 to 6% and my portfolio is down 9%. I'm not happy. But for those of you that are new, my name is Maurice Moore. I'm with More Investment Solutions. Please like and subscribe. I would definitely appreciate it. It helps me with the algorithm. And I'm just trying to make more videos for you guys, more content for you guys. And I'm trying to reach 1,000 subscribers. So please like and subscribe to this video. We're gonna be talking about my portfolio and what it's looking like right now, and actually what mistakes that I made and what I'm going to do here on out to try to become a better investor. Right now, my stock portfolio is sitting at $3,524.58. For those of you that are new, I started this portfolio about a month and a half ago with just $500 with the intentions to growing my portfolio in real time for you guys so you can see how easy it is to invest. And right now, for the past few days, it's definitely showed how hard it is to invest. But if I stay consistent in my strategy, I should turn out just okay. I am a long-term dividend investor. So what that means is I invest in stocks that actually pay me a profit, that actually pay me a dividend, and then I turn around and reinvest that dividend right back into my stock portfolio and into those same stocks, and it creates a snowball effect. My intentions is to actually create an asset that actually pays me for the rest of my life. That's my goal. So let's go ahead and get into the portfolio. For the day, I'm down $337.02. I have the hopes of the after hours at $55.82. It's probably gonna go down tomorrow, but who knows? I'm excited about it. I'll take that $55.82. For the week, I am down $329.73. For the month, I am down $149.66. For the past 3 months, I'm up $180.61. For the year, I am up $267.10, and all time I am up $366.65. So when the stock market dropped, this has been about for a week, I am down 8.55% in my portfolio, literally almost 9%. I know I'm stressed out. If you look, I was already up $4,000 to $29.97, and it dropped down all the way from there. I'm not worried about it because, like I said, as a long-term dividend investor, the mindset is to dollar cost average down in your stocks. And today I'm going to be talking about 2 stocks that I did dollar cost average down, and those are the only stocks right now that I'm actually in the negative in. But I'm going to let you guys know that I did make a mistake when I did dollar cost average down. But now that I know what mistake that I made, I'm going to sharpen that tool, and hopefully you guys can not make the same mistake that I made, and it'll make you guys even better investor as well. So 2 of the stocks that I'm talking about today, one of them is an ETF, and what an ETF basically is one stock that actually is diversified with many different stocks within this stock. So if I just wanted to invest in an ETF or a few different ETFs, that'll be just fine when it comes to your portfolio. So right now, Vanguard High Dividend Yield ETF is sitting at $79.34. I got 4 shares of this stock at a total equity of $342.50. My average cost that I got in at this stock is at $81.62. I have a total return on my investment of negative $9.85. You may ask, how do I have 4.312 shares of this stock? I am qualified for having fractional shares of my stocks, so I just buy my stocks with $1 price instead of buying them at a whole share. And so let me take you guys down to my history of this stock to show you guys what it's like to actually dollar cost average down in this stock and what mistake that I actually made that I should have waited on. So I did buy this stock originally on June 4th, 2020. I put $190 into this stock. I bought this stock when it was $82.69. And so I started watching the stock market a little bit. On the 10th, that's when things started going downhill. Well, actually on the 9th, it started going downhill. But on the 10th, I reinvested some more into this stock so I could bring my average cost down a little bit. So first I just put a few dollars in there, $3 in there. It only gave me 0.35 shares of this stock. I bought that stock at $84.56. Then on the 11th, I put another $80 into this stock. I saw the stock market go down a little bit again. So I was like, okay, I have the dollar cost average down in my stock. And what this did, you guys, and I'll show you guys in the next stock as well, it increased my anxiety. And so I don't want to feel that anxiety when it comes to the stock market. How that happens is by looking at your capital. Stay away from your capital. If you're a long-term investor and you're looking for dividends, don't worry about your capital. Yes, it's going to go down, it's going to go up. But if you believe in the stocks that you're invested in, do not worry about it. And that's what that's one of the mistakes that I made today. So I bought into this stock again at $80 on June 11th, and it gave me 0.97 shares of this stock, so just under 1 share of this stock. I got in at $81.64. So again, I am dollar cost averaging down on these stocks, which is a good thing. But where the mistake lies is take your time, stick to your strategy, use your budget. My budget is literally $100 per week, every week, at least $100 per week. And literally this few days alone, I put in probably over $600 to $700 into the stock market, literally not following my strategy. And if you don't follow your strategy, that's how you end up becoming a day trader and not a dividend long-term investor. So stick to your guns, stick to what you understand. So the next day, I bought another $79 into the stock market on June 11th, which is today. I put another $79 in, and it gave me just under 1 share of that stock, and I bought it at $79.05. I brought my average cost all the way down to $81.62. So mind you, if I go back to the history and I go to June 4th, I bought in at $82.69. So you can see now it was at $82.69, and then I averaged the cost down to $81. And now my average cost is down. But if I would have just waited a little bit longer and then invested later on, my average cost would have been a lot lower because I would have took my time. The next stock that I'm going to talk to you guys about is IGT. IGT, I just made a video on it. I did my research on this stock. I'm very confident in this stock. So I got really bullish in this stock when the stock was going down. I got really bullish. And I got so bullish that it became a strong part of my stock. That means a lot of capital is in this stock. So if this stock goes down, guess what happens? The capital starts to go down. So instead of taking my time learning when to invest in it to bring my average cost down, I became really bullish. And what that means is I got aggressive with the stock. I started buying in the stock, trying to bring my average cost down. So I felt like when it does go up, I would have a better profit, which I will. But if I would have waited, I would have brought my average cost even more down. So International Gaming Technology right now is selling at $8.71. I have 47.14 shares of the stock of a total equity of $410.66. My average cost is at $10.50. So I have negative $84.20 right now on this stock. You can see the cost is at $8.71 and my average cost is $10.50. Definitely overpaid for this stock at this moment. But like I said, I got really aggressive, and what I did was I kept jumping into this stock because I actually bought this stock at $11.37. I saw it in the green. I know better to buy things in the green. That's the first mistake I made. I should have waited for it to dip, but I bought it in the green, and that was the first mistake. So I bought in at $11.37. I bought 2.19 shares of this stock at $25. And then on June 8th again, I put another $100 into this stock market because I saw it go down a little bit. I bought that at $11.50. I have 8 shares of that stock when I bought it in again. So that actually increased my average at that time. And then again on June 9th, I saw it dipping a little bit. I started seeing the problem in the stock market. I bought another $100 in that stock share. I bought another $100 into the stock. So that gave me 9.11 shares, and I bought that at $10.97 because I started seeing it drop. And then that brought my average cost down a little bit. Then I started looking at it again. I started paying attention to my capital go down and go down and go down, not realizing that the stock market is crashing. We're going into a recession. And so I started to buy more. And so I bought another $50 at June 9th. I just put another $50 in, and that gave me 4.6 shares of the stock. So right now, I bought that stock at $10.68, which brought my average cost down. Then on June 10th, I bought another $50 worth of this stock, $10.14, because I saw how much it was going down. That gave me 4.932 shares of this stock, and that brought my average cost down. And then I bought another $100 on June 10th for 9 shares, and that for 9 shares at $10.05, and that brought my average cost down. And then I bought another $60 worth of this stock on June 11th, gave me 6 shares at $9.10, and then that brought my average cost down to $10.50. Don't you see where I made that mistake? I could have waited. I could have just let my time, let it relax, give myself a breather, not stress about it, made sure my budget is ready, bought more shares with the budget that I have, and that would have brought my average cost down itself. Instead of I was jumping in and losing more money, I wasn't being strategic. You have to have a strategy, guys. Yes, you're supposed to dollar cost average down when your stocks are on sale, but you have to be patient. Don't just jump in. Now you're just becoming a day trader. Don't do that. Take your time, breathe, leave the capital alone, understand that you're a dividend investor, and then dollar cost average down when the time really comes. Be more patient, guys. I really appreciate you guys for listening to my video. If you guys have any questions or tips, let me know in the comment section. I would definitely appreciate it. Thank you guys very much. Peace.